don't sing on the air. Hi, hello, and welcome. This is Wayne Bilal with this week's Profit Maximizer moment. I was laughing because I started to sing and went, nobody wants to be tortured by that. Anyways, this week we're going to be talking about what actually creates profit and stability. All right. Um, Look, I started working in public accounting as a sophomore in college, actually, my second, sophomore. Middle of my sophomore year. So 1975. I've been doing this a long time. You don't get all this weight by just being young. and I've been pretty much working with businesses my whole career. Actually, I have. Most of it in public accounting, where I'm dealing with hundreds of clients every year. I had 6 years where I was comptroller and then chief financial officer with Magnolia Coca-Cola, which is a local bottling company. They had 6 plants regionally. But even that I count as working with small business owners. Okay, and let's be honest, every business owner wants three things really. You want to make money. You want to have a business that's stable, that continues to make money. You're not just you know worried about the next contract or the next sale, and you don't want to kill yourself doing it. Okay, but the truth of the matter is, I can almost tell whether a business owner knows what they're doing by asking a simple question: how's your year going? 80, 90% are going to tell me, oh, sales are up 10%, or sales are up 20%, or sales are down 10%. Right with that one simple question, I know they're looking at the wrong thing. Okay. Because the only thing that matters in business is profit. How much of that sales is going into your pocket, into your bank account, into your pocket? Okay. If you're just tracking sales and that's all you're watching, you're celebrating growth. But growth without profit is chaos. Okay. I'm going to show you three things that make a difference. Now, I'm going to talk. Why do I say that, by the way? Let's back up a second. I mean, I had a client that went from 200,000 in sales and they both pocketed $50,000. Pretty cool. Next year, they popped it up $500,000 to about 750, 800,000, so a little more than a half a million, and lost 200,000. How? Well, because they grew so fast, they didn't have systems in place. They didn't do some of the things we're talking about. They didn't know what they were doing, and they didn't have records that could show them, hey, we're going crazy here. All they looked at the top line, cool, we got this contract, we're doing this, we're doing that, and then they didn't run their business correctly. They didn't run their numbers so that they were underbidding. Of course, they were getting business. They were low bid because they didn't know what they were doing. So first, cash flow is important, and the timing of the cash flow is more important than revenue every time. As simple as that. You can have, let's say, $50,000 comes in that you bill this month. Great, congratulations! You're on track to have a $600,000 business. Not bad, assuming it's the same. Uh, when are you going to get paid? I mean, I've run into this more than once. Okay, you have a client that bills now and ends up with they do the work now, they bill it at the end of the month. The client takes 45 to 60 days to pay him. All of a sudden you're out 90 days. Not unusual. All right. Problem: when's your bills due? Let's be honest about it. Your bills are due, like, your people want to get paid now, your employees, your rent, your overhead, your building payment, heck, your house payment. If you're not collecting, you can't pay yourself. All right. I've seen people with $2, $3 million in sales that couldn't pay themselves, that they're going bankrupt. Okay. So that's why timing is important. You literally can't pay those people with, here's my invoices. All right. Now you can borrow against them, very expensive. You can do factoring. You can do these quick not payroll loans, but these, what I call shark loans, where you get an amount, you got to pay them literally daily or weekly. Um, let's be honest, 30-day terms means you're actually financing your customers. All right. If money comes in after it needs to go out, you're in trouble. Let's be honest. You can show profit, but if you run out of cash, you're done. Simple as that. Talk to any banker, they'll tell you that. They're more interested in cash flow. That's what they look at. And that gap between revenue and cash is where you can die. Stability is the secret. So first of all, have a budget. Track your cash flow weekly, not monthly. Make sure you know what's going on. Understand the cash conversion cycle, which is from the time you make the sale to how long it takes you to get paid, and how can you speed that up. It's something we discuss. I want to spend a lot of time. We're getting ready to launch our 13-week course. Matter of fact, next week I'll talk about that. We're going to have our my brain just stopped. Sorry. We're going to have our profit challenge, profit reset challenge, starting on the 17th. I'll give you more information on that at the end. But we're going to discuss ways to just simple things. I've had custom clients that have changed the way they bill, taking more money up front or giving a discount for up front. I'm not a fan of that one. Okay. I've changed the way we're billing. We're in the process of moving away from getting paid when we do work to getting paid monthly. All right. So there's a lot of different things you can do. And we're going to talk about that in the 13-week course. Going to talk about it next week on the Profit Reset Challenge. Okay. Um, Second thing, get a cash reserve. You need to have at least 30 days cash. I like 90. Well, you're the business owner. What if you ended up in the hospital for a month? Happens. See it. You know, could the business survive you being gone for a month or two? If not, then you need to have either a good cash reserve. I like a cash reserve plus a line of credit in place so that we can cover that. Okay. Um, I'm sorry, I lost my place. Um, what we're looking for is eliminating the worry. Okay, I've had that. I went through that system where I had to worry more about doing the work that I was going to get paid on quickly rather than doing the work that would bring me more profit. Once I got a reserve in place, I didn't have to worry about that anymore. Systems, all right? You want, there's really three systems you want. You want a predictable lead generation that keeps the phones, hopefully not phones, but you know, keeps the phones ringing, getting people to come in. Um, Man, there's nothing worse than just nobody's walking in. Consistent pricing. You don't want to discount because you're desperate. Matter of fact, you probably want to raise prices. We'll talk about that. You want to be able to sit down and review your numbers on at minimum monthly basis. In truth, sometimes weekly, but I like weekly personally. All right. You want to have a budget in place so you know what you should be, what you can wait, so you can expect downturns. I've literally, I remember the first few years I was in business, I would sit down after tax season, do a budget and go, well, crap, I'm going to run out of money if I don't find $50,000, $60,000 in new revenue. Quite frankly, was a great motivator because it always happened when I went out and hustled. But I wouldn't know that if I didn't have a budget in place. So you need to have that. Um, the other system you want to have, you need to have a pricing system that's based on getting profit, not just a guess. So you need to know your cost. What does it cost me for every one of my items? All right. Or for any one of my services. All right. And so yeah, that's one thing we need to do. All right. And then you want your weekly financial check-ins, usually 15, 20 minutes tops. Okay. Sorry about that. I got the USA Hockey on the other channel, which I should shut down because they just scored a goal and it got my attention. All right. Look, there's one metric, one thing you need to know that will predict your future and whether you're making money. And that's simple. You know, it's your operating cash flow as a percentage of revenue. That's the one I want to see. How much is your cash flow coming in as a percentage of revenue? And more importantly, as I do my budget and see where I'm at. So what this is going to tell me, I mean, yeah, I want profit margins. That's probably one of the more important things. But like I said, you run out of cash, you're out of business, even if your business shows you're profitable. So you need to make sure you have as much as you can that you understand cash and forget sales. Sales is third. I mean, look, you can't forget sales. If you don't sell, like I say, a business without customers and without sales is called a hobby. But you can sell yourself into bankruptcy. I've seen it more than once. Okay. So what I'm looking for, are you actually converting the sales into cash? So are you collecting for starters? All right. Uh, and how fast is that happening? That's important. Can you fund your own growth or do you need to borrow to survive? A little bit of both doesn't hurt. Okay. It depends on the situation. Every situation is different. Here's a way to improve it in 30 days. Tighten your payment terms. Move from 30 to 15. Require deposits. I do on new customers. Move to monthly bill on reoccurring work. Reoccurring Reoccurring revenue is the most, I think, uh, secret remedy is solving almost all my cash flow problems for any customer I put it in place, including myself. Okay, stop offering services that don't collect fast. Simple as that. I've eliminated a lot of work that's not profitable or it takes forever to pay. Um, I lost my place. Oh, if yeah, um, I really did lose my place. Sorry. There we go. Um, if you really want to get yourself to a place, well, cut expenses. I couldn't find my place, but I know that's one I want to talk about. Yeah, look at your overhead. Make sure you're not. The only reason to spend the dollar is the same reason you hire an employee or you buy equipment. It's going to help you make more money, or it's going to make your life easier as the owner. That's it. There's no reason to do it. So you got to look at every single item on your expense report and see, is it actually helping me? If not, forget it. Get rid of it. I saw a client did a few simple things like this and went from 3% cash reserve to 20% cash reserve. And it's not that hard. I mean, it's just a matter of changing some things up. All right. What do you want to do? Benchmark kind of roughly. A healthy business should be looking at 10 to 20% cash flow, operating cash flow. Little hard. That's difficult depending on your industry. And I have a program that I can kick in your industry and compare it and see what the metrics where you should be. But that's a rough rule of thumb. Struggling, you're 5% or less, or even negative. Um, eh, that's and truthfully, if you're below 5%, you're in a very fragile situation. It just takes one bad month and you're in trouble. It doesn't matter what your revenue says. We're talking about cash. All right. Here's what I want you to remember from today. Profit and stability don't come from working harder or selling more. Okay. They come from managing your cash timing, building real systems, and watching the right metrics. All right. And getting your revenue, your operating profit in place. You can have $1 million business that's unstable. I've seen three, four, $5 million businesses that are one bad week away from going broke. All right. Now, yeah, they are able to survive because they've been, they put money in. There's nothing worse than that, having the owner have to put money back into the business. I've also seen a $300,000, $400,000 business that's rock solid. What's the difference? Cash flow. All right. They're measuring what's actually there. Stop celebrating sales and billings and revenue. All right. Start tracking cash flow, building systems, and watching your operating percentage, your cash grow. All right. That's how you create a business that lasts. And to be honest about it, if you have a profitable business that's easier to do, all right, and I mean you have the extra cash flow, you can be much pickier about what customers you take and take only the most profitable ones. You're not out there taking every low ball thing you're there. Plus, it's easier to attract good employees. Your suppliers will give you better deals. That's the key. That's the difference. Okay, look, drop me a comment, shoot me a comment, hit it to my email, Wayne at wjb-cpa.com. I'll see it, every one of them, and I'll answer it. And hey, make sure if you're not, we're going to start sending out emails. Anybody who's on our email list and my clients too, about the profit challenge, the 90-day profit challenge that we're doing next week. It's going to be half hour to 45 minutes. Let's see, what days are those? Next Tuesday, Wednesday, Thursday, starting on the 17th. Very easy to get to. Go to waynebelisle.com/challenge. waynebelisle.com/challenge. Hey, until next week, this is Wayne Belisle saying let's make this our most profitable year ever. Have a great rest of your week and a good restful weekend. And until next time, uh, let's make this our most profitable year ever. God bless. See you at church. Take care. Bye.